All right, let's talk about SpaceX because they are officially making a massive leap into the public markets. And it is absolutely the single most debated financial event taking Wall Street by storm right now. Whether you're a numbers person tracking the math or someone who is totally captivated by the narrative, the sheer scale of this moment, well, it demands our attention. So in this explainer, we're going to strip away all the noise and look directly at the underlying data and that wild vision surrounding this truly monumental event. And when I say monumental, I mean literally record-breaking. We are talking about $75 billion raised at a staggering $1.77 trillion valuation. Just let that sink in for a second. $1.77 trillion. This isn't just a huge public offering. We are looking at the largest IPO in human history. Naturally, the absolute number one question on everyone's mind is simply, do I buy in? But to answer that, we really first have to understand the incredible foundation and the grand vision behind it all. Because getting to that $1.77 trillion, yeah, it wasn't exactly a walk in the park. Elon Musk actually started this company over 25 years ago, and he has a very specific, honestly pretty brutal way of describing that journey. He says that starting a company is like eating glass and staring at the abyss. It's this brutal cocktail of unfun, agonizing work. And the punchline to all that? After all that pain, most companies still die anyway. It's just a stark reminder of the sheer grit that paved the way to this historic valuation. But, surviving that abyss is exactly what fuels Musk's grand vision for the future. He isn't just looking at SpaceX in a vacuum here. No, he sees a master plan where his three major powerhouses, SpaceX, Tesla, and his artificial intelligence venture, xAI, all ultimately converge. He's planning on layering their unique cutting-edge capabilities directly on top of one another. So, what is the result of that massive convergence? Solar-powered AI satellites. According to Musk, to harness a really massive, non-trivial amount of the sun's energy, you have to move deep into space. And to pull that off, you need Tesla's expertise in solar energy and battery tech, you need SpaceX's completely unrivaled aerospace engineering, and you need xAI's artificial intelligence all working in unison. It is literally sci-fi level infrastructure for humanity. But big visions come with very big price tags. Okay, so let's put the sci-fi narrative aside for a second and look at the brutal math, because this IPO is incredibly expensive. SpaceX is currently being valued at 95 times current sales. To put that into perspective for you, they're going public at nearly 5 times the multiple of NVIDIA, which is, one of the hottest tech stocks on the planet right now, and an unbelievable 25 times the multiple of the S&P 500. But any traditional metric, that is just a steep price. And honestly, history gives investors every reason to be cautious here. If you look at the top 25 mega IPOs over the last 15 years, the median return after 1 year, negative 31%. And it gets worse. The median maximum drawdown from day one is over 50%. I mean, those are the kind of brutal, sobering numbers that make rational investors think twice before buying in on opening day. And if we widen the lens over the last 40-plus years, the average U.S. IPO returns just 6% annually in its first 3 years. Sure, okay, it's technically positive, but it is roughly half the return of the broader U.S. stock market over the exact same period. So you're taking on all this immense, concentrated risk of a brand new public company for literally half the historical reward. Stephen Rotner's research really cements the danger here, too. While those day one pops are great for insiders lucky enough to get an early allocation, everyday investors buying after the open, they typically trail the market by negative 4.4%. So the heavy statistics are telling a very clear, very cautious story about jumping into these absolutely massive public offerings. But there is this weird, almost counterintuitive data point that is actually driving the massive hype here. Historically, IPOs with negative earnings deliver roughly twice the first-day returns of profitable ones. Crazy, right? But why? Well, because the market absolutely loves scale, and it loves a good story. Massive companies dominate the headlines, and they drive just sheer retail excitement. And let's be real, there has never been a bigger combination of scale and headline hype than SpaceX. But you really cannot talk about a massive, seemingly overvalued Elon Musk company without acknowledging what we'll call the Tesla exception. For 15 solid years, critics and bears swore up and down that Tesla was wildly overvalued. They promised a catastrophic demise was just right around the corner. Instead, since its IPO, Tesla's stock has returned an unbelievable 25,000%. That 25,000%, That translates to an approximate 40% compounding growth rate over a decade and a half. Tesla utterly defied traditional logic and absolutely crushed the analysts who predicted bankruptcy. Now, obviously, you can't just blindly extrapolate the returns of one specific business to another, right? But this historical timeline proves a vital point. Applying standard business metrics simply doesn't always work when you were dealing with Elon Musk. Plus, we have to remember, SpaceX is not just coasting on Musk's reputation here. It has incredibly strong, super unique fundamentals backing it up. First off, they have a near-complete monopoly on rocket launches globally. This allows them to service massive external clients while simultaneously launching their own proprietary products into space. And the crown jewel of those products? That would be Starlink, their initiative to beam internet down to consumers everywhere, which is currently scaling its revenue aggressively inside the company. Yet getting to this dominant position required a willingness to embrace almost certain failure. Musk stunningly admitted that when he first started, he gave SpaceX less than a 10% chance of succeeding at all. He literally told people they were probably going to fail, but they just had to try. Why? Because he deeply believed that if a new company didn't enter the arena, we would never become a truly spacefaring civilization. And really, that is the emotional core of the whole SpaceX narrative. While other legacy aerospace companies build perfectly good rockets, they simply weren't pursuing the technology necessary for the ultimate goal, making multiplanetary life a reality. Musk is explicitly trying to make Star Trek and all those exciting sci-fi futures we've read about, well, real. So investors aren't just buying a rocket logistics company. They are buying into the survival and the expansion of humanity itself. Which sets up the ultimate tug of war here. On one side, you have the math. Rational investors protecting their portfolios based on the brutal history of mega IPOs and that staggering 95 times sales multiple. But on the other side, the narrative. Rational investors throwing out those traditional metrics to bet their capital on the greatest entrepreneur of our time, truly believing he is going to defy the critics once again. And you know what? Both sides are entirely rational from their own perspectives. Ultimately, the market is going to be the referee here, and thousands of new millionaires are going to be minted in the crossfire. That alone makes this a massive event for the broader investment community. But as we wrap up this explainer, the core question for your own strategy remains, when faced with a $1.77 trillion dilemma, do you follow the math or do you bet on people?